Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to the weekend commentary. And I will start off by letting you know that I'm having some internet issues. So getting the economic data and earnings and stuff that are coming up this week, I will not be able to do. So hopefully I'll have either Dedicated Trader or something else where you can look at that stuff, because I will not be able to do that right now. So in fact, I'm going to have to go somewhere else to a public location, to a Starbucks or something, to upload this video just to get it out. So I've been having issues all weekend. So basically just going to cover charting and go through all that stuff, which is the most important. I mean, a lot of times, there's times I feel like the economic data and the earnings stuff's not that important. In earnings season is starting to, we're on the downhill slide, basically. The majority, well, I don't know if I'd say the majority, but most of the big name companies have come out. There's still some left, but so I don't think that's a huge issue. I don't think it's a huge ordeal. So let's get right to it. And we'll start off with this, like usual. Something quote that happens to hit me at that point. And I don't know why this one did, but I think it's good. Stop trying to arrive and simply embrace the journey. And if you're anything like me, then when you start trading, you get all excited about all the money you're going to make and everything, and you dream about this lifestyle and all this stuff that you're going to do and all the things that and kind of lose sight of just having fun with it and enjoying it, because it is a journey. It's challenging, it's tough, and we get kind of lost in wanting all this stuff. And really, you can compare it to life. I mean, a lot of times we do that, right? You hear stories of people that get stuck in the, climbing the corporate ladder and doing all this stuff, you get so busy trying to make a living that you forget to live life. So busy doing all these other things that you don't stop and smell the roses. So I think it's important, especially with respect to trading, to enjoy it. It's a challenge. It's tough. You're going to have good days and bad days, and learn to appreciate it all, because even the bad days can lead to good days, and a lot of it's just shifting your perspective and changing your mindset and looking at it from a little different view. It's kind of crazy to think of, and I remember saying this at not the last Trader Super Summit, but the one before, and most people laughed at me because they go, it's kind of crazy when you get to a point where you take a loss and you get excited about it. You get out of the trade and you take a hit and like, yeah, you're out of it. It's gone. It's done. It's over with. Now you can move on to something better. So, and that's part of the journey. It's part of the deal. So, don't beat yourself up over it. You're human. You're going to make mistakes. Things aren't going to go in your way the way you expect them to. Just have fun with it. And it's sometimes hard to find the good in things, but just have fun with it. Just enjoy it. And don't expect it to happen overnight. You've got students that have been at it for 4 and 5 years and they're frustrated, and so look, some people it takes 10 or 15 years to get there, and if it does, then so what? That time's going to go by anyway, right? If 10 years from now, it's going to be 10 years later, whether you did it or not. So don't worry about it. Just have fun and go with it and enjoy the ride. So with that being said, there you go. A little bit of my screensaver. So getting on the charts. Interesting. I mean, we still have some disparities between stuff. We got the SPX, a little pullback on Friday, only 10 points, not that big. Still looking, it looks bullish, but we've also had a big run in the last month. So a pullback, a healthy pullback would be expected. Almost kind of a bearish engulfing pattern on Friday. I wouldn't know that I'd call it that. Technically it is, but not a huge amount of volume, about average basically. So nothing unusual here. I would expect at least to pull back. In fact, a pullback to about 2,000 would be healthy. It would be good if we're going to stay bullish with this market. I'm still pretty much just on the sidelines. Just not really even not excited about jumping on board anything because there's not that definitive of a direction. There's not really anything that's compelling to me that says to be in one side or the other. So if I was going to do anything, I'd be trading 1, 2, 3 day trades. That's it. But I don't get terribly excited about those. They're okay. But looking at the Nasdaq, moving on to that, you see that it's hit a not the all-time high, but we've gotten up to that 5100 mark almost. We hit it the other 5092, and then pulled back a little bit. We had a Harami Thursday, and then a kind of a bearish engulfing pattern on Friday. But bumped our heads there, so we'll see what happens with the Nasdaq. Industrials looks basically exactly like the S&P, so no surprise there. Transport still basically neutral. Not bullish, not bearish. I mean, technically it's a little, it's made a higher high, but just barely. It's not significant enough for me to say that it's a new high. So basically neutral on the transports. And then Russell, Wednesday had a nice big pop with pretty solid increase in volume, relatively speaking, especially relative to the last month. Pretty darn solid and a big day. And then a healthy pullback Thursday and Friday. So we kind of sort of got bullish on the Russell. We barely poked above that high back there in September. So again, kind of like the transports, I wouldn't get that excited about calling it a new high. I'd still call the Russell neutral. So, and then the VIX, of course, is just sitting there right about 1500 or 15. I was going to say 1500. If it went to 1500, that'd be crazy. It'd be insanity. But so yeah, not terribly exciting. Which I don't like. I had this big drop was fun. It was only a few days, but that was a blast. And right now, it's like this is kind of boring. I think it is, but we'll see. See how things develop. So I'm going to go straight to the big guys. So I'm not going to have two separate recordings for this. Just do that and this since we don't have time for the other one. And I want to. Okay, good. Make sure it's still recording. Those that haven't been here, I've done this before and spent 35 minutes recording or so, I thought, and then went to stop the recording and it never started. So I get a little paranoid and check that because I don't like working for 35, 40 minutes and get nothing out of it, having to do it again. So got almost 19 candidates this week. Starting off at the top of the alphabet with the ABCs. AmerisourceBergen. Looking for, and this was on the radar last week, looking for that breakout, and it actually did break out. Not sure what happened that one day. It was kind of a crazy, rally. Not only broke out, went up and hit the target, went way beyond it. No idea what that was. I'm assuming some kind of news. But and then there's the earnings day. Had kind of a big hammer type of pattern. So we're still above that $96 level. And the fact that it's holding that, if it rallies from there, I'd expect it to be bullish. And the bullish momentum from Tuesday may just continue. So, and it looks like we had bullish momentum on Thursday rallying into the close. So basically it's a rollover, looking at it to roll up for this next week. Indicators are basically mixed, so not giving us anything there. Adobe, all-time highs. Looking for a breakout to the upside. If it does, we've got a nice little push here, I don't know, 4 weeks ago. Nice little rally there, and it's been nice little sideways, kind of a just relaxing move the last week and a half, 2 weeks. So if it breaks to the upside, pretty decent chance it's going to keep going. So looking at, what is that, $4 almost? A little more than $4 of potential. So I like the looks of Adobe. Alexion Pharmaceuticals. It's been around a lot longer than I realized. We had a nice little, almost an inverted head and shoulders, kind of a double bottom. It's double bottom with a right cheek up, but that's a really high right cheek. So, but nice little breakout there. Same thing as ABC. Tuesday, nice breakout to the upside. Not huge volume, but breakout of 172. Was that earnings though? No, that was on Thursday as well. So very much like ABC, very similar type of pattern without the massive volume on Tuesday. So everything else looks the same. So the only issue with this is it's about $2 away from the entry point already. So it would have to pull back some more to get a decent entry point on this. So we'll see what the action looks like this week, Monday. Amgen. Big bearish engulfing pattern on Thursday. A little hangman doji on Wednesday. Bearish engulfing pattern Thursday and a follow through on Friday. So bearish. Interesting how the 3 out of the first 4 are biotechs. Interesting. Bluebird is biotech as well. That is crazy. I didn't even notice that. No, AmerisourceBergen's healthcare. Okay. But four biotechs and pharmas in a row. Interesting. Edwards Life Science, Molina Healthcare. Wonder where DaVita's at. That was on the radar a couple weeks ago. But looking at Amgen, looking fairly bearish. There's the big thing. I keep looking here because I know there's a few of these that look good. There's the 200-day moving average, which is acted as resistance. It's back above it. So if it breaks below it, and it breaks it, which you can see the Stokes and the MACD are both turning bearish. So if it breaks back below that 200-day moving average, the expectation is for it to continue to drop. We have about $12, actually $12.02 to be exact, of potential to the downside. So I like the looks of Amgen on a break to the of that support level. Bluebird Bio. Oh, this is an interesting one. We don't need weekly. There's a daily. And we go to candles, and you look back November 14, it was somewhere in that area, huge gap to the upside that never got filled. And here we are. I mean, we were at $43 there, and that was when, let me zoom in here. Yep, December, first part of December. And we basically went, let's just call it $50 to almost 200. It's the high on that day, 197.35. Basically 200 in May. So in 6 months, it ran 400%. That's insanity. And now here we are basically about 6 months later, and we're back down at 77. And if we break that level, there's absolutely nothing to stop it from going down to that 50, 45, 50 area. We've got the target set at 45, which is maybe a little bit aggressive, but I mean, if it drops to 50, if it drops to 60, I mean, pulling at least a sizable chunk out, unless it just tanks. But and you look here, I mean, the indicators all look bearish. Stokes is rolling over. It's in the middle of the range, but it's rolled down. MACD starting to roll back down again. It's already negative below the zero line. You got Bollinger Bands, both of them starting to point to the downside, which is bearish. And you've got a support there about 77. So if it breaks down, there's really nothing to hold it until it gets to 45 or 50. There's no support there. So, and you look back a month ago, I mean, we dropped from 140 to 87, 53 points in a week and a half. It's entirely possible. I love the looks of this one. I love the look. This one I will watch closely this week. If it breaks down and it looks good, I would be all over it. Because of the potential. That's the thing. I mean, this is a potential grand slam. So I love the looks of blue. BioMarin. Here's the interesting part is we've got, and this is we got earnings there. You can see the longer term picture on this. And there's the 200-day moving average, and that's part of the reason I have this. And this could go either way. Technically, we're still in a downtrend on an intermediate term basis. Short term, we've broken out to a new high. We've got kind of a triangle type of pattern, a little sideways move there, but it's broken out of that, moving higher. So if it breaks to the upside, that's where I'd be interested, and that's really what I'm looking for here. So it's interesting having Bluebird, one biotech, and then the next biotech, even though there's some bearishness to it, it's got some other bullish signs. It's kind of mixed signals. So, but if the entire sector takes off to the upside and Bluebird goes up, then BioMarin may be an opportunity. If the entire sector goes down and Bluebird goes with it, then Bluebird may be. So it's nice to have one on either side. So we'll see what happens with the entire sector. And that's funny. Sometimes you have biotechs that go, want to go one way, want to go the opposite. Obviously, you always have that. But I mean, generally speaking, sectors go hand in hand. But I think biotech's one of the few that you could have several going multiple different directions all at the same time, just because their business is what they're in. So we'll see what happens. That's why I like technical analysis. All the other stuff is just kind of going through all the fundamentals and stuff is just too much. Just read the charts, and whatever the charts say, just do the charts on a short-term basis. Cameron International, oil and gas. This is one that has stayed very solid. I mean, you can see, I mean, granted, it got beat up a year ago, but then it's taken off to the upside the last few months, much more so than the rest of the sector. So, we've got, a break above that, what is that, 66.80 area, and it's been holding it for the last week and a half. So looking for a move to the upside, and it's sitting right at the entry point, essentially. So we'll see what it does on Monday. CCI, Crown Castle. Huge bullish momentum after earnings. And then it's this nice little, almost a pennant type of pattern. So looking for an all-time high, pushing the bands, looking for it to break out to the upside. If it does, I'd jump on it. I'd probably be a little more cautious considering, we're 76 to 86 in a month or so. But at the same time, sometimes these things just run. They're just crazy. The telecom has been relatively bullish lately, so we will see. Charter, not terribly excited about this one, mainly because I prefer breakouts, and most of the ones we've seen so far are breakout opportunities. And this is a rollover. This was on last week. And so if it continues downward from where it is, we're sitting right at the entry point, basically. We had earnings coming out. This might have been a couple weeks ago. I don't remember. But everything was already there. So this is one of those that could very easily break to the upside. And if it does, then it's one to flip over, because then we've got a breakout, right? Because there's nothing up there. And actually, the indicators look kind of bullish. So I basically left the bearish plan on, and then we'll see what happens on Monday. If it takes off to the upside, then flip the plan over. So we will see. Canadian National. What is going on here? I must have missed something. CNI 6163. I think I forgot to move that. 6163. I hope that's the only one I missed. Enjoy the journey, right? That's what I said. I know I don't like messing that up, but hey, I made a mistake. I know it's only happened one other time ever, but there's the beauty of this one. And that's one reason that it's on here is we've got the 200-day moving average. It's been used it 3 times now just in the last month or so. And sold off pretty heavy on Friday, pretty solid increase in volume. So the only part that I don't like, obviously, is that it's already through the entry point. So kind of a weird position to be in a lot of times because we need it to pop back up. But if it pops back up, do you really want to get in a bearish position if it's going up? And that's when it gets tough sometimes to pull the trigger, is to do it when it's going the opposite of what you think it will. So we'll see. This is a little bit tougher one. Some of the other ones here, I think it was Adobe that I liked. CNI is not one of my favorites, but we'll see what happens with it. Chevron, another oil company. Again, the momentum has been, at least on a short term over the last 2 or 3 months, there has been some bullish momentum on the entire oil sector. And on Chevron, you can see the last 2, 3, 4 weeks, we've had just some sideways move. So we had that bullish momentum about a month and a half ago, the big rally up here from 75 to 90, and then sideways. So if we break to the upside, we break out of that resistance of 92.20, pretty decent chance we'll be off to 96, 97, 100, somewhere in that area. And I got 97.62, which is the next resistance level. So we'll see what happens with Chevron. Eaton, similar look, kind of an almost an inverted head and shoulders. A little bit, but also a double bottom. It could be multiple different patterns. It really doesn't matter which one you call it. Whatever it is, if it breaks out to the upside, then we're probably off to the races. And if you consider it an inverted head and shoulders, which toss a line on there, pocket right there, we broke out big time on Friday. Actually interesting. I didn't draw any of that stuff on there, but there you go. We'll see if it plays out. It's always interesting to watch these things, but I was looking at it more of just a breakout of that resistance level. So either way, you're going to get about the same trading plan, about the same risk reward look. So, and you can see there, MACD's been trending higher for quite a while, for at least a month or two. Everything's looking bullish on this one. So I like the looks of Eaton. Edward Life Science Healthcare Equipment, another one basically on the verge of a breakout. Kind of sort of has. 3 big updates, about average volume on Friday. A tiny bit below the average line, but the moving average line has increased quite a bit in the last month, which is a bullish sign. We've got big increased up volume in the past month. So the momentum is there to move higher. It looks like it will. MACD looks like it could blast off any minute. Stokes riding up there. So I like the looks of this too. EW looks really good. Fortune Brands, nice, beautiful, beautiful symmetrical triangle. About as textbook as it gets almost. And Friday it broke out, couldn't hold that level as high, did drop off a little bit of a shooting star type of pattern. Causes a little concern, but at the same time, as of right now, not worried about it. If we take off to the upside, then we take off, and I would play the pattern. Just let the pattern play out the way it typically will. So I'm not going to let the fear of the fact that it's not a perfect breakout, beautiful one, then just is what it is. So it might just take off and rally in 3 days. Who knows? MasterCard. Bearish engulfing pattern on Friday with pretty solid volume. Now, could that be earnings related? It probably is. Not an enormous move, but depending on what obviously the news shook out a little bit, but we had a solid increase in volume. So if it breaks back below that previous high there, it was at 98.30, then pretty good chance of a pullback. Question is, how far will it go? And this is the challenge about these. A break back down below a resistance that's been broken is correction's normal, but sometimes they don't go, going against the trend, trading against the trend, usually want it to be shorter term. 1 to 3 days, 4 or 5 days tops. Because the saying, right? The trend is your friend. Well, if you trade with the direction of the trend normally, and that's what you want to do is go in the direction of the trend, then when you go against the trend, typically the counter moves, the pullbacks are not that big and not that far. Sometimes they are. And we had one here when the whole market crashed, right? But it was pretty much going sideways there. We didn't have a big bullish momentum move. We had sideways action for a few months before it had that big drop. So here we've got some bullish momentum, and then if a pullback happens, then it may not be that big or that far. So just have to be cautious, that's all. Molina Healthcare. We have a falling through methods, kind of. It's definitely not textbook, not exactly what you'd be looking for, but it's essentially there. And the nice part about it, obviously earnings came into play, but you've got an increase in volume on both of the days that it dropped. The only part that stinks about this is that we didn't catch a Friday, right? It's already $1.25 below the entry point, and there's really $5 of potential anyway. So that's way too much to wing it on. But also having a big move like that to the downside makes the likelihood of a retracement back to the upside quite a bit better. So what I'd love to see here is a roll reversal, to have it bounce back up to about 64 or so and then roll over from there. That would be the ideal situation. PFG, Principal Financial Group, nice inverted head and shoulders after the pullback. It's basically gone sideways. It's not beautiful, but broke out pretty solid on Wednesday, pulled back, and it's tapped it. It's basically just holding that line. It actually broke out about a week ago, a little more than a week ago, and then dropped back below it and bounced back. So it's, not terribly, this isn't something I'm thrilled about because it's not beautiful. Let's see if there's something here that caught my attention. Maybe that's what it was. The 200-day moving average is right there. So if it breaks above it, obviously that's about the entry point as well. So the entry point is just a few pennies below that or in front of that. But so this one could turn out very well. And that's the funny thing is we never know. You basically just have to, find something that looks good and take a shot at it because you never know how it's going to turn out. This thing could run all the way to 65. It's always 50-50, right? So it's a matter of playing the odds. PH, Parker Hannifin, Industrial Machinery, which a lot of these guys, Caterpillar, Cameron, one that's on this list, have gotten beat up in the last several months. And what was it, CMI Cummins? Cummins got beat up. That's one I've been trading a little bit and made a nice chunk of change on the downside. But inverted head and shoulders on some of these too. Parker Hannifin's one where it's not broken out very big of the neckline, but basically creating the plan based on that 106.70 level. So if it continues up from here, not sure there's nothing there. Well, the 200-day we got to watch for, obviously, if it breaks out to the upside. This one I would kind of expect to go more sideways. So I don't expect this one to hit anytime soon, but then again, this thing does have some big moves too. I mean, you got here from 94 to 106 in 4 or 5 days. So it very well could do that very quickly. So I've got to be prepared for it and plan for it, just in case. And last but not least, Travelers. All-time highs. I don't know. This is one of the things that kind of makes me question this whole rally thing. I mean, back in 2009, we're at $30 a share. Today, we're at 112. You know, in 6 years, are you telling me a property insurance casualty company is 400 times bigger than it was, or 4 times bigger than it was 5-6 years ago? Are they really making that much more money? Are they 4 times more profitable than they were back then? And it could be yes. You know, I don't do the fundamental stuff, but to see so many stocks like this that have moved this far, this fast, it just makes it questionable. It's not normal. So, so we'll see. But we have a big bearish engulfing pattern, and you got that huge move to the upside over the last month and a half. So a retracement would be highly likely here. It's already retraced a big amount, relatively speaking, on Friday. So that's only 50 cents below, and you're talking about about $6 of potential. So, you know, 50 to 60 cents of leeway could be given there. So we'll see what happens. I mean, if it takes off to the downside quickly on Monday, we missed it. Such is life. But if it pops back up a little bit, gives us any kind of other opportunity, then this one could turn out to be good. So we'll see. Just like every single one of these could turn out to be good. And that's the challenging part. You know, I say on some of these, it's like I like the looks of this one better than, you know, some of them do look better pattern-wise. They look like they have more potential. But that's the funny thing is we never know. And that is, quite frankly, why I trade the way I do, is because I don't know. And I don't pretend to know anymore. I don't try to think that, you know, just because I know how to read the charts and I can find a pattern, spot a pattern at the drop of a hat, and just because I understand what it means and how to do it, it's important, but it doesn't mean a lot. It doesn't mean that it's going to do what I think it's going to do. And what I've learned is that no matter how good I get at reading charts, because I used to think that if I can just get really good at reading charts, if I can master the charts, then I'll be right a huge percent of the time and I'll make a fortune. It's not true. It doesn't matter. What matters is probability. Do you have the odds on your side? And you don't know which way it's going to go. Once you get to a point where you recognize that you don't know and you never can know with any kind of certainty, the only thing you do know is it's 50-50. The only thing you do know is that, okay, here's the pattern, here's the likelihood of it doing X, Y, and Z, and then here's my plan. And that's the only thing we can't do. Everything else is out of our hands. But when you get to a point where you realize that all you have to do is put the odds on your side, find a good pattern, something that's highly probable, put the odds on your side by having a good, solid trading plan, and then just let things happen. That's all you can do. That's all you can control. Then you adjust accordingly, manage not only the trade, but manage your emotions as it moves. That's the only thing we can do. We can't control other stuff. We don't have any way to make the market do what we want it to. But we bring that mindset to the market, and we think that if we just do this or we just do that, we think somehow we have control over it, and we don't. So enjoy the ride, just like the quote said. Just learn to enjoy the journey. Once you get your mind to that place where you know it's about odds and you know it's probability, then you look at these and you might say, yeah, I like this one better than that one. But at the same time, I know from reality and experiencing it that the ones that I wasn't that excited about turned out spectacular. And the ones that I really liked, they stunk. They didn't present an opportunity. They stopped me out. And the ones you didn't think would happen did. Once you start to experience that, and you see that happen enough times, you just throw your hands up and go, I can't figure this out. I just don't get it. Because that's the reality, right? You think one's going to do something because it looks great, and it doesn't. The other one you don't think is going to do anything does exactly what you didn't think it would do. So it's just, you just toss your hands up and say, I'm just going to enjoy it. I got 19 opportunities here. I'm going to watch them. I'm going to make the best choice I can about which ones I like the most and which ones hit the entry points and which ones look like the most probable. Which ones look like they have the best odds. And then just go with it. Pull the trigger and run with it and let it do its thing. And enjoy it. And if you lose, you lose. So what? If you can learn something from it, if you look at it and you say, okay, I made a mistake here. I should have done this and this and this. Okay, learn from it. Go on. Try not to make that mistake again. Anyway, enough pep talk. That is it for the weekend. We'll be back in the next day or two with an update with what is happening in the market and also the little guys. So y'all have a great rest of your weekend, and we will see you down the road. Bye-bye.